3 easy tax planning tools for cryptocurrency investors. Prior planning prevents poor results. It's a lesson many of us have learned the hard way, and it is particularly true when it comes to investments. Effective asset management can have a huge impact on the value of your portfolio, especially when it comes time to pay your taxes. Cryptocurrency values have skyrocketed in recent years, and multitudes of investors have gotten rich quick off of the groundbreaking technology underlying virtual currencies. This means there's a lot of new wealth to be managed, specifically when it comes to taxes. Avoiding tax liability altogether is impossible. However, a qualified tax professional can help you protect your assets from the Internal Revenue Service, IRS. The Certified Public Accountants, CPAs, at Happy Tax provide tax advice and planning services that minimize your tax exposure, which can save you tons of money in the long run. In the meantime, however, there are a few things you can do to keep the IRS off your case. Here are a few good tips. 1. Keep good records. Keeping good records is a great way to make sure you're ready for tax season, especially when it comes to cryptocurrency investments. Too many of us are scrambling through old filing cabinets and desk drawers, desperately looking for those critical receipts and records come February. However, almost everyone manages their investments online, so why not rely on electronic copies of your financial records? Often, these records are held on a centralized data storage system, which is basically like a filing cabinet with a search function. 2. Understanding knowns and unknowns. Cryptocurrency investors are pretty sophisticated when it comes to digital assets, but overconfidence can be very detrimental. For example, some virtual currency investors continue to believe, wrongly, that they are protected by tax loopholes like the like-kind exchange rule found in Section 1031 of the Internal Revenue Code. Unfortunately for these individuals, Bitcoin and other virtual currency investments are taxable assets under federal law. As a result, many people who have thus far avoided taxation are now facing IRS fees and penalties. 3. When in doubt, call a professional. Understanding what you know and what you don't know can prove critical when it comes time to file your return. CPAs understand the ins and outs of tax policy, and the skilled professionals at Happy Tax can help you manage your cryptocurrency assets in a manner that shields your wallet from unnecessary tax exposure.